Welcome to QuickBooks at Kapi'olani Community College. This video will go over Chapter 3, where we delve into sales and receivables for a service business using QuickBooks Online. This is the first chapter where you're really entering a substantial amount of transactions, so there are a lot of new things to learn. Well, let's get started. How does QuickBooks Online really work? Well, it's what's called an event-driven accounting program. That means that it can capture information about events that may or may not end up becoming accounting transactions. For examples, you could make estimates, enter purchase orders, invoice a customer, and record a vendor invoice or an employee time card, and many other kinds of transactions. So when you have a complete transaction, you'll know because it will generate a change in assets or liabilities, or perhaps both. You can see completed transactions popping up from externally generated documents from outside vendors, for example, banks and others, and internally generated source documents, for example, our own checks, a bill of lading that we may capture, interest on overdue accounts receivable, credit memos, many other kinds of things. So we'll use QuickBooks to prepare a lot of internally generated source documents, and we'll basically record the information directly onto the source document and then either print or electronically send that document out. To have a sound accounting system, we have to maintain what's called an audit trail. That means that any transaction should be traceable all the way up into the financial statements. Similarly, looking at financial statement account balances, you should be able to trace them backwards through the trial balance, through the ledger, through the journal, and back to the source documents that led to those account balances. So we need to keep an audit trail. QuickBooks has a really friendly user interface, and so it's easy to use and seems like you don't really need to know accounting, and that they do a lot of advertising to that effect. Happily for accountants, this provides a plentiful supply of clients for them, since they now have badly messed up records because they thought they could do it without knowing any accounting. So on the back end, in processes, actually the accounting cycle is going on in the background. Journal entries get made either when source documents are created, or when externally generated transactions get input, or some kind of pending event like a purchase order, for example, gets finalized. Journal entries will be generated by the system. You won't notice them unless you're looking for them, but there they are. Posting occurs to the general ledger simultaneously, basically, with the generation of the journal entry. So it's real-time posting or simultaneous posting. And the general ledger final balances are what appear on your trial balance. Posting also occurs to subsidiary ledgers like accounts receivable and accounts payable. Inventory, if we have it, job cost ledgers, which you don't have it online, and many other subsidiary types of accounts. So the ideal situation is that there's a forced agreement between subsidiary ledgers and the controlling account. So for example, a general ledger account called accounts receivable should consist of the subsidiary ledger account balances, the total of the subsidiary ledger account balances for all of our customer receivables, and same for accounts payable and accounts payable subsidiaries. QuickBooks won't allow these subsidiary and control account to have different balances. So for example, if we go inside here and we decide that we would like to make a journal entry here, we can just click on the plus sign and ask to make a journal entry. And let's say I'm going to make a receivable from somebody. So I'll go here and I'll say accounts receivable and $1,000, and I'll put down here a credit account to, I don't know, cash, for example, checking $1,000, and I'm good. So I'll just go ahead and save this puppy and I'll be done, right? That's all I gotta do. Good to go. Huh? What? Yeah, sure, save it for me. I have to choose a customer. Come on. Okay, there you go. So that's what I'm talking about. So the general ledger accounts receivable won't let me make an entry directly to accounts receivable. I have to pick a particular customer's account so that both the customer account and the controlling account will change by the same amount. Now there's some problem areas in accounts receivable. Sales receipts, sales invoices, and receiving payment are three entirely different things. A sales receipt is a cash sale, so for services, that would look like a debit to undeposited funds and a credit to whatever your revenue account is. For a sales invoice, that's a sale on account, so that looks like a debit to accounts receivable, not undeposited funds or cash, and the credit again to the revenue account. Well, what's receiving payment then? Isn't that the same thing as a cash sale? Nope. That's collection of an account receivable. So we would debit undeposited funds and credit accounts receivable. In other words, that's the flip side of the sales invoice. Sales invoice, sale on account, receive payment, collection of the receivable. Yet many problems occur in QuickBooks because of people not knowing which of these transactions does what. So you have to be careful about that. When you're generating credit memos, you click the refunds and credits icon and you essentially do a backwards account receivable or a backwards sale on account. Debit the revenue account, credit the account receivable. Now all of these credits have to eventually be applied, just like payments, to the related accounts receivable, or it'll show up as open. So you can do this right after you do the credit memo, or by doing a refund, or you can apply that later. So apply means you get the credit memo or the payment to match up with the related customer invoice that it's supposed to be paying or crediting. And clear means it has been properly matched so that the invoice does not continue to show up as open or not collected on. Now sometimes you'll run across some invoices that don't seem to have any matching revenue on the income statement. That would be whenever you'd set up a beginning customer account receivable. That revenue, quote unquote, would have happened in the preceding period back when you set your beginning balance. And the only real way to do this is to set it up at the point of account creation, and you want to do that in the previous period. Don't accidentally go and delete these invoices thinking that you didn't make them so they don't belong there. They belong there because they're the ones that created the beginning balance. Now if you void an invoice and you delete an invoice, that's not the same thing at all. Voiding is the way you want to do it because that maintains a good audit trail, and then you also cannot or should not reuse the same invoice number. Deleting does not maintain a good audit trail and doesn't really do anything to help prevent that invoice number from being reused. So your undeposited funds is a special kind of an account. That's what maintains a link between your cash sales and accounts receivable collections and the bank statement. So this really represents cash on hand until you've deposited it. So cash sales and accounts receivable collections, they get done in detail, and then the individual amount from each customer has to show up in their account. So you have received payment amounts or sales receipts that go into undeposited funds, either one. And then when it's time to do a bank deposit, you aggregate all of the undeposited fund individual amounts that were matching to the receivable or to the sales receipt and take that to the bank as one large deposit. So record deposit and picking the undeposited funds you want to deposit is what merges all of your individual received payment amounts into one large bank deposit, and then that money ends up in checking as opposed to staying in undeposited funds. One thing to keep in mind for this chapter is that when you're working with QuickBooks Online, your ongoing company, for example, your Beach Barker Company, you want to use one browser, and then when you have to do the drill activities, you want to use another browser. That allows you to flip back and forth between the two browsers without having to log in, log out, log in, log out. So way big savings of time. Hope this helps. Bye now.